Hello, fam. I hope you're good. I hope you're having a fantastic trading week. If you're new to the channel, my name is Laurent. You can call me Black. If you find any content in this channel to be of use to you, be sure to give us a quick like and don't forget to subscribe so that you'll be notified in the future content when we produce more stuff. So the first that you're going to be looking at, we're going to be looking at Crash 500. We took this trade with my VIP students, and I also sent it as a trade idea to the free channel, right? So we did take our entries at around here. I sent the signal when this 4-hour candle closed, as it gave us a very strong bullish momentum after breaking above this market structure here and retesting it. As you can see here, it broke, went bullish, crazy bullish, retested, and then came back insane bullish with this bullish engulfing candlestick. That's when we took the trade. Now, prices, right now we're still in low profits and we haven't yet gone break even, because what I expect to see is that I want to go break even after prices break above this market structure here, which brings us to our first lesson in today's video, is that how or when to go break even on a trade, right? Now, in today's video, what I'm trying to teach is that how do you maximize your gains while trading, right? So the first lesson is that you should always know when to go break even. Now, when to go break even is that you should always go break even when a previous market structure is broken relative to your market structure. So for instance, here, we took our entry here. What's the most relative next market structure is this point here. As you can see here in the past, it has been used also as support. Here it was a support, here it was a support, right? So once prices break above here, right, meaning once prices reach above this market structure here, then they'll have no business coming down back here. Otherwise, this market structure will have been broken, right? So if the market structure is broken, of course you want to be out of the trade. But unless the market structure is broken, we shouldn't go break even. If you go break even before this market structure is broken, then you have gone break even too early, right? So the first lesson in today's video is that always go break even when a market structure is broken closest to relative to your market, where the market prices are right now, right? So if this market structure is broken, then you can go break even. This trade, I believe we took it, and if you took it as soon as I sent it, you're still in profits right now, so don't worry about it. Okay. So the second lesson that I want to teach about today is about adding on positions. Okay. Now, adding on positions can come off as, being greedy or trying to get it or whatever. But adding on positions is actually one of the best ways you can actually increase your profits, right? It's I call it adding on. I call it adding on. Okay. Now, adding on, as I just said, is actually one of the best ways you can actually increase your profit margin by a whole lot of scale. Because in trading, there are only two things that can happen, right? In trading, there are only two things that can happen if you take a trade. The first one is that a trade can hit your stop loss, right? Or the second one, your trade can run into profits. So with this kind of mindset or scenario in your head, is that there are only two outcomes once you place a trade. A trade can go into negatives and all the way to hit your stop loss, or it can go into profits and keep on running in profits. Now, if you have these two scenarios, you should always in your head be playing out this scenario like, is this trade right? Okay, has the market acted as according to how I was expecting it? Or has the market just gone against me, right? Now, if the market has gone against you, meaning if it has gone with scenario 1 and it has gone to hit your stop loss, okay, I shouldn't do that. But if the market has gone with scenario 1, then you should accept your loss as soon as possible and just go out of the trade and close the whole thing. Accept your loss early on and move on. But if a trade goes in profits, like if it goes into this scenario 2, what you should do is that you should actually try to maximize the best way that you can to actually make more money out of that trade. And one of the best ways to actually make money if a trade runs into profit is by adding on. By adding on, okay? By adding on, this can actually increase your profit margin by a whole lot. Now, when I say adding on, is actually just adding on more positions into your winning trade, because you've already noticed that that trade is a winning trade, right? Now, how do you add on in a position? Now, adding on in a position, let's say, for instance, maybe this is a support area. We have another support area here. I'm just going to give you an illustration. Maybe this is a minor support area, and then this is the major target. Okay, so let's say you took a first trade here, a long position, perhaps here, saying that I'll expect to see my trade run all the way until here, right? And then this is a 1:8 trade. Let's make it a 1:6. So this is your trade. You're expecting to hit a 1:6 trade, 1:6.5. That means in this trade, if it plays out perfectly, how much are you going to make? You're going to make, let's say, if you risk 2% in that 6%, maybe a 2% risk, right? It will equal a 13% increase, right? A 13% increase in your margin if you take this trade here, right? Now, let's say the market started moving. The market from your entry point came, broke this zone, and then it retested here, retested this minor broken support level. Now, adding on is actually after the market structure has been broken and retested. At this point, you can actually add on more positions to come to your support area, because you've seen that the market is going with your analysis, so you can actually make more money out of this trade, right? So if the market breaks this market structure and comes all the way here, what you need to do is go into lower time frames to look for more, adding on more positions into this trade so that you can actually make more money. Like in this trade here, look at this. It's a 1:10, right? 1:10 if you add on, because obviously you're going to take it from a lower time frame, and with this minor support area, it will give you better odds, right? 1:10. So how much you're going to make? Again, with a 2% risk, it's obviously going to be 20%, right? So you're actually going to make an extra 20%, like an extra 20% of your account just by adding on. Now on total, in total this one, you're going to make, right? You're going to make 33% increment in your total account just by one trade. 33% increment just because of adding on, right? But if you didn't add on, you could have ended up with just 13%. You could have left this 20% on the table. That's the advantage of adding on. It gives you more buying power after you already confluence. And these trades actually have a very small percentage of hitting your stop loss, because it's already moving in your direction. It's already in your favor. You already see that it's already working out according to your plan. So that is why adding on is one of the best ways to actually add your trading balance. And that's what actually we did with gold. As you know, we actually talk from experience. So with gold, with this trade, The first trade we actually took down here at around the 6th of this month. So as you can see, the first trade is actually running right now is in over 800 pips. And the second trade that we added on, right now it's actually floating at over 150 pips, right? So it's mad crazy. The first trade, it's a 1:6. The second trade, it's a 1:9. As I told you, the second trade always gives the best risk to reward ratios. And this, by adding on, is where you actually make most of the money. This is where the money is, guys. So adding on is one of the best things you can actually do in your trading career. Now, depending on your entry criteria, that's when you should be adding on. But as for me, as you know, once the market structure is broken, that's when I add on, that's when I get the big bucks. So now should gold mess around with me and come back to retest this broken market structure again, best believe that I'm going to be adding a third position to take it all the way up here. So that's all about adding on. Now, after you have added on a position, there's another thing that I like to teach you about is how to actually manage a trade, right? Now, let's take an example of this USD ZAR trade that we have running. Holy shit, it hit take profit. Our trade hit take profit. Woo! I love it. I love this trade. I love this trade. So, oh man, oh man, I love this trade. Okay, so for instance, if maybe the trade was still running, if for instance, the trade was still running, or already hit take profit, I'm not going to use it. Let's use another example. USD Chef. I know it's still running. 4 hours. Let me switch on the daily so that you can actually see it better. Okay, now from the daily perspective, you can actually see that the trade has a very small place before actually hitting take profit, right? So this is a 1:6 risk to reward trade, right? Okay, so the trade is right now here and you haven't closed anything. You haven't secured any profit. You haven't secured anything. What you're really risking is you're not risking 1% to make 6%. You're not risking 2% to make 12%. What you're actually risking is actually the opposite. Like, for instance, the market is here right now, and you're risking all of this profit. Let's say you're just at break even because obviously you haven't secured anything. You're risking all of this profit just to make this profit. You're risking all of this, right? Just to make this one. So it's, if you look at the risk, it's 0.12. That means you're risking $1 to make 0.12 cents. Like, that's how crazy it is. Okay. Now I see a lot of people, once the trade is already in profits like this, they're like, no, I'm not going break even. I want it to hit take profit. With trading, one thing is clear, and that's anything can happen in the market. This trade here, it can be, it has reached here, but you'll be surprised that the market can turn around and just go all the way back up to its entry point and even break all the way up to stop loss, right? But the good thing is that we're already at break even, so it can't hit our stop loss. So anyways, anything can happen. What I'm trying to say is that the market can come back all the way up here, okay? That's what I'm trying to say. Now, if this is possible, then you should know that you're actually risking all of this profit that you already gained just so that you can actually make this little thing here. And that's being greedy. That's the reality. So if a trade has already been in profits like this, what you need to do is actually just be securing profits. There's a way to close the lot size, okay? Not sure if all of you guys know how to do that, but there's a way you can actually close half the lot size of your trade. And if you close half the lot size, you can actually just close some profit and let the rest keep running. Therefore, you'll have made money and also still capture this move here and make more money. So leaving it like this without securing any profits is actually very bad because you're risking all of this gain that you already made just so that you can actually make a little bit more. And that's just being greedy. And you can't afford to be greedy in the market. Otherwise, the market is just going to eat you alive. That's the reality. So that's how you should manage your trades. Always be securing profits along the way. Okay, guys? That's nice. So let's switch back to 1 hour. I mean, this is crash 500. Now, let me talk a little bit about volatility 75 because I promised, as you know, I'll break it down a bit. So obviously, as the chart shows here, we're going to start from the 4 hour. Volatility 75. Okay. So volatility 75, prices have broken above here. So as you can see here, oh man, I wish I didn't close my order and I would have still been in profits. But anyways, so with volatility 75, as you can see, prices has broken the previous market structure here. What I'll be expecting to see is, you can see here, it has formed an evening star. What I'll be expecting to see is that prices to come down here, retest this broken market structure at the confluence of the 0.38, because it had a very strong momentum. So I'll be expecting to see prices bounce off the 0.38, which confluence with this previous high. And then from this point here, I want to see market take off. So that's how I expect volatility 75 to play out in this particular time frame. So guys, I do appreciate if you've been listening to me this whole time until the end of the video. I hope this video has been of help to you. Remember the 3 tips of making money in trading, right? The first one, always go break even. Never let a winning trade go back into losses. The second tip is that you should always add on positions that are already winning. And the third tip is that you should always be able to manage your trades well. Risking a trade, I mean, risk management is one thing, but trade management is another thing. I'll go deep into it by describing it to another video I'll make someday, maybe, if I see you've enjoyed this video. Now, to give me your feedback, leave your comments in the comments below. Give us a quick like and don't forget to subscribe to the channel for future content. Until next time, guys, I appreciate you all. Peace.